Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look at the dollar versus Canada. We had retail sales come out a little bit weaker in that country. We also saw durable goods come out a little bit stronger in the U.S., so that's sending the dollar Canada to the upside. Let's see what it did technically. I'm looking at the 4-hour chart of this currency pair, and what we saw in the move was a move to the downside yesterday that was helped by the PMI data, which came in weaker in the U.S., and that pushed the price lower for this currency pair, and in the process we came down toward the 50% midpoint of the April trading range. That's just moved to the upside right through here. That 50% retracement came in at 1.36612. Also, the price tested a swing area. The swing area is defined by different lows right here, which forced price to the upside. We fell below that level here, but then reestablished and moved higher. We came to use support here, moved higher. We came here, moved support and moved marginally higher. And then we rotated below the level and used that level as resistance before moving to the downside and extending all the way down to our low at 131.76. That was back in December of this year. It took all the way until a couple weeks ago to return back to this level right through here where we based and moved higher, and then moved back to that level and trading yesterday and found support at the low of that swing area before moving to the upside. Before the data this morning, the price was trading back above the 100 bar moving average on the 4-hour chart, 136.72, and after holding support right here. So there is a little bit more bias to the upside off of the support. At least risk could be defined against that level, or was firmly established at that level. As long as the price remained above that level, that would be more bullish. And we got that break from the data today, with again the retail sales in Canada come out weaker than expected, but in durable goods pretty good, pretty strong in the U.S. So we are seeing a rotation back to the upside, back above the 38.2% of the April trading range. And as long as the price can remain above, let's say the 137 level, that's close risk. For traders who want to see be a little bit more conservative, you can set the stop below maybe the 100 bar moving average or the 50% retracement down in this area right through here. So buyers are trying to reestablish support, trying to push the price higher. On the top side, we'll look toward this swing area between 137.35 and 137.65. I know it's 30 pips wide, but it was defined by ceilings through here, which then became a floor, brief floor through here, and then became a ceiling again, and a floor again through here. So you see the importance of this area through here before moving to the downside. So we did move above and below it in trading last week, and this week we've been using that level as resistance at the early part of the week. So we need to get above this area to increase the bullish bias in the dollar versus Canada. So that's my look at this currency pair from a technical perspective. We are seeing fundamental reasons for the pair to move higher. We'll see if that momentum can continue in trading today and going forward. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.